All right. Good morning, everybody. Welcome to Early Morning Crypto Talk with Bitcoin Brandon here on this Thursday morning. Good morning, everybody. Hope you guys have had a good week so far. One more day left in the week. Month is already moving by fast. As a disclaimer, I'm not a licensed financial advisor to be discussing financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed decision on which direction you want to move into. So we have Mafus on the line, Stan Williams, Marty Juarez, Linda Gallardo, Bethany Gibbs, Eric White, North Carolina. You guys are getting that hurricane now. Is it still considered a hurricane or tropical storm? Michael. There's 4 rules I live by in the crypto space to have success. Rule number 1, crypto education is key. It is everything. Rule number 2, never invest money you cannot afford to lose. Number 3, always get a return on investment back as fast as possible. And number 4, where do you see yourself 3 months, 6 months, a year from now? What are you willing to do to make it happen? Take action, make a decision, and go to work. Remain focused. Do not get distracted. There's so many things in this space that can distract you. Now, this is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. All right, so let's go ahead and get this kicked off and started. The theme for today is going to be whales. And you ask yourself, whales, what does that mean? If you are new to the crypto space, whales is just a term for individuals who have a lot of money. And they are in the crypto space. And when you have a small market, meaning crypto, the cap is not in the trillions yet, whales can end up affecting the market, impacting the market up or down. When I was taught how to trade crypto coins, one of the things they told us to do was never do trades more than $10,000 at a time, or $10,000 worth of coin. If you're going to do $30,000, $40,000, or $50,000 worth of coins, then you want to split it up into multiple accounts or multiple transactions. Because when you start to get into the high marks like that, the people are looking at the buy and sell orders. So when you put in a buy order or a sell order that's that much, everybody else reacts to it. So now instead of you reacting to the market is reacting to you. And that can be good or bad, depending on, who is, depending on whatever your goal is, your short-term goal or long-term goal. And I realized, I think my Bluetooth was on the whole time. So I hope you guys were able to hear me clearly. I didn't know, I thought I had it on speakerphone, but it's all good anyways. So let me put this link in the chat box. There's 2 articles actually covering this. The first one, we're going to talk about whales join China's richest rank. Seniors take a swing at Bitcoin. So one thing that I predict is that you're going to have the richest people in the world in the very near future are going to be involved in the crypto industry. Now, it's not like crypto just came around yesterday. It's been around since 2009. Next year marks Bitcoin's 10-year anniversary. So some of these people bought Bitcoin way back in the day. Others created companies that are only less than 2 years old. And they are quickly becoming Bitcoin multi-millionaires and billionaires. So in today's edition of the Daily, we look at the cryptocurrency entrepreneurs who now rank among the richest people in China. Wow, you see that? The richest people in China. The limited return to operations of one broker and a rather amusing attempt to explain Bitcoin to older folks by the AARP. China's wealthiest whales. I didn't see that movie, Crazy Rich Asians. I don't know if you guys saw that movie. It got great acclaim about it. So the Haroon China Rich list of 2018, the Chinese answer to Forbes 400 was released on Wednesday, and for the first time includes a total of 14 people working in the cryptocurrency space. This is the 20th annual ranking of the richest individuals in China, with a wealth cutoff of 2 billion yuan. That's 290 million. So to make this list, you got to be worth at least 290 million, and a total of 1,893 individuals made the list this year in China. Wow. 2 Bitmain executives, Zhan Ketuan, 95th place with 29.9 billion yuan, age 39. Then he's got 29.5 billion yuan. You know how much that is in US dollars? If 2 billion yuan is 290 million, what do you think 29.95 billion is? I'm doing a quick calculation in my head. What about 10 billion? Anyways. And Zihan Wu with 16.5 billion yuan at age 32 led the way. The third Chinese crypto whale, 41-year-old Binance founder Zhao Jiangping, took 230th place on the list at roughly 15 billion yuan. The report also noted that the blockchain industry is now officially the fastest growing source of billionaires in China. All right, you hear us talking about Bitcoin billionaires. The fastest growing industry, it's not just going to be China. The fastest way to become a billionaire and then by default a millionaire is by getting involved with crypto and the blockchain. There is no other way. It's not going to college. It's not stock and bonds. It's not real estate. It's not direct sales with health and wellness companies. It's not coffee and juice and skin and products. It's crypto. Other well-known crypto personalities on the list include OKEX founder Star Zhu with 10 billion yuan, who took 354th place, as well as Leon Li of Huobi, who was ranked 556 with 7 billion yuan. That's still over $1 billion. One broker to start processing withdrawal requests today. Marshall Islands Registered Contracts for Difference Broker OnePool Ltd., which operates the One Broker brand, has announced that the company will revive some of its functions today. The team tweeted that they will start processing clients' withdrawal requests at 12 UTC time. 3 U.S. agencies took action against an international Bitcoin-funded securities dealer last month. Wait a minute. Is this have anything to do with my... No, I don't want to fast forward all to that. The AARP, formerly the American Association of Retired Persons, published a glossary of Wall Street buzzwords this week to help senior citizens improve their financial literacy and cut away the confusion when talking with high finance big shots. But the list took a somewhat funny swipe at Bitcoin while echoing some particularly tired tropes. The glossary defines Bitcoin as a bunch of computer code that a bunch of criminals, here we go, idealists and speculators agree is worth real money. Sadly, its real money value swings widely, making it impractical except for criminals, idealists, and speculators. Stuff right there. You know this is what they're telling the seniors out there, the baby boomers. They don't know nothing about Bitcoin and crypto. And they read an article from the AARP. Well, I want to know what crypto's all about. My grandson keeps talking about it. And they look at the AARP newsletter, and they're talking about it. It's a bunch of computer code. You know what that means right there? They're saying you old people don't understand computer code, so we're just going to call it computer code. That's already strike one. That a bunch of criminals, that's strike two. Computer code and criminals. Idealists, okay, that's another strike, because when you're talking about the baby boomer generation, they are set in their ways. It's the younger generation that's more idealist, the older generation that's more conservative and more realist about reality. Ain't got time to be all idealists. We're trying to survive. And speculators. Well, that's not the baby boomers. Again, the baby boomers are more conservative. They're looking at survival for the next 30 years, for retirement. So just those code words right there, they're telling the senior citizens and the baby boomers not to take this seriously. And then it continues, sadly, its real money value swings widely. In other words, it's too volatile, baby boomers. You're living on Social Security. You don't have enough money to take risks like this, making it impractical, except for criminals. So again, if you get involved with this, we're saying you're a criminal, an idealist, or a speculator. That's what the AARP is doing. That's why KGX is here. We got to stop this nonsense. There is a complete amount of disinformation that the media is saying to the public. And if you're not educated yourself, you're gonna miss the vote. The AARP also defines blockchain as, one, a different bunch of computer code containing an unalterable record of a series of transactions. The most famous is a digital ledger recording all Bitcoin transfers. Well, technically that's true, but that is the worst definition you want to give of the freaking blockchain. Can you imagine me doing a Bitcoin boot camp and I stand in front of the room and someone says, Brandon, tell me, what is the blockchain? And I say, oh, it's just a bunch of computer code that contains a record of transactions, and its most famous ledger is Bitcoin. That's the blockchain. What? Even I have got to scratch my head over that one. What the heck are you talking about? And I know what the blockchain is. What do you think the seniors and the baby boomers, they hear something like that, they're going to be like, I still don't get it. And then number two, a word often uttered by companies hoping to snare investors' attention and dollars. That's what they describe the blockchain is. Talk about the matrix. What if I'm going to Philly at the end of the month and I stand in front of that room and I'll be like, all right, guys, here's why you need to pay close attention to the blockchain and why it's important to you, because it's a word that's often uttered by companies hoping to snare you guys of your attention and your money. That's the blockchain. Misinformation or disinformation from the AARP. They need to be sued for that. If I was a member of the AARP, I'd be writing a letter. I'd be calling somebody. That's a bunch of crap right there. The rest of the terms were also written in a comical way. For example, one entry defines an ETF as marry a mutual fund to a stock, and this is their baby? What? They really think that the baby boomers and seniors are just stupid. But I guess they say, they'll believe whatever we say. That's insulting. That is really, really insulting. A word often uttered by companies hoping to snare investors' attention and dollars. A bunch of computer code. That's insulting. All right, let's go on to the next. But I want to save this article. Where did I see? There was a quote that I'm going to use here. The blockchain industry is now officially the fastest growing source of billionaires in China. That's going to be my quote for today. So you'll see me post that on Facebook later. All right, here's one. New study shows Bitcoin whales do not cause price volatility. So we're still talking about the whales. I'm curious on this one because I would tend to say Bitcoin whales do cause price volatility, and it was just proven 2 weeks ago. The moment a whale started moving coins from an account that had hundreds of millions of dollars worth of coins, the entire market took notice and started to drop. Panic. So what do you mean whales do not cause price volatility? Of course they do. The whales are the reason why the market is down right now, market manipulation. But let's see if I can learn something that can say that I'm incorrect. Blockchain research company Chainalysis has recently investigated the 32 largest wallets of BTC, or the so-called Bitcoin whales. The biggest BTC owners hold a combined amount of 1 million BTC, equal to around $6.3 billion at press time. Bitcoin whales have long been the scapegoats of the crypto sphere, shouldering the blame for the huge volatility of digital currencies. Back in August, Bloomberg even ignited rumors about a Bitcoin whale who supposedly single-handedly caused the BTC price to shed 15% after selling 50,000 coins. The sudden price decrease had the crypto investors worried that a few big players dominate the BTC market and can influence the price at any moment. However, the new data shows that such concerns are exaggerated. Really? Okay, let's see. According to the report, Bitcoin whales are a diverse group, and only about a third of them are active traders. And while these trading whales certainly have the capability of executing transactions large enough to move the market, that's true, they have, on net, traded against the herd, buying on price decline. They appear in aggregate to have stabilized the market during recent price declines, rather than exacerbating price movements. This makes sense since these trading whales are professionals with no vested interest in abruptly tanking the market. Well, what you just said is you just proved that they are manipulating the market. They can manipulate it up or down. Whatever they do, the rest of the market follows suit. So let me say this again. When a whale moves, everybody reacts to the whale. The whale does not react to everybody else. I wonder if these people have any skin in the game, if they're even traders. Because let me tell you what a whale does. They're looking at the market, and they see the market has risen up to maybe 10, 15%, or lately 5 to 7%. And then the whale says, all right, it's time to get some profit. And they put in their sell order. You know what the rest of the market does? They react to that. And if the whale made a sell order, they all start putting sell orders in. The whale makes their sell. Then all the others follow suit, and the market starts to drop. You know what the whale does? Sits there and watches it. And watches it drop, 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 drop. And it dropped because of their actions, by the way. And then they say, okay, I think it's bottomed out. Let me make a buy order. Then they put a huge buy order in. And then the next thing you know, everybody else who's smart that's following the whale's buy and sell order say, the whale's buying, it's time to buy. And now you got more people starting to buy than we're selling, and the market begins to rise again. That is all started from the whales. That's the clear definition of manipulating the market or moving the market in either direction. But let me continue here. The researchers have divided the whales into 4 groups. The first of them being traders. Okay. The 9 wallets possess more than 332,000 BTC, just over $2 billion, which is a third of total whale holdings. They engage in crypto trading on a daily basis and are relative newcomers in the crypto sphere, most of them entering the market in 2017. The second group is miners or early adopters. It includes 15 wallets, also holding 332,000 coins. As you would expect, the trading activity of this segment is almost non-existent. Many of them have, in fact, cashed out a significant amount of their Bitcoin holdings in 2016 and 2017 as the price of BTC skyrocketed. The last 2 groups are a bit shady: lost whales and criminals. 5 wallets holding over 212,000 coins, around 1.3 billion, have not seen any transactions since 2011, meaning that their owners have most likely lost their private keys. Unfortunately, this means they are no longer able to access their big BTC holdings. Finally, there are 3 wallets with a total of 125,000 coins, $790 million. 2 are connected to Silk Road darknet market, while the other seems to be involved in money laundering. The combined data on the net gain or loss of BTC in these wallets suggests that, contrary to popular opinion, Bitcoin whales do not cause volatility. False. And I'm going to throw another monkey wrench in their little article here. They're looking at these wallets. Here's something else they haven't figured out. Whales are not stupid. They don't have all their Bitcoin in the same freaking wallet. I saw, this was back in 2017. I was listening to, I don't know if it was a TED Talk or what, but one guy, he was like, and I'm only going to say this one time because I don't want to get kidnapped or anything, but in any given wallet, I don't have any more than $30,000 or $40,000 worth of coins. And then he said, I have hundreds of wallets. Hundreds. So you have a bunch of Bitcoin whales out there that has their money dispersed all over the place. Why? Because they don't want to get hacked and lose everything. It's like putting all your eggs in one basket. They have multiple accounts, paper wallets all over the place that they moving stuff around through. And what he did, he said he did it through Monero so that it can't even be tracked. And then moved it back into his Bitcoin wallets. So this article seems to think, there's only about 5 wallets, that are the big whales. No, there are hundreds of whales out there that you don't know. You might think their wallet only has 30,000 in it because that's the only one you could track. But they've got 50 to 100 wallets with 30K in each. That argument right there just threw this whole article under the bus. The combined data on net gain or loss of BTC in these wallets suggests that, contrary to popular opinion, Bitcoin whales do not cause volatility. That is false. In fact, they were increasing their BTC holdings in late 2016 and 2017 as the prices were soaring. That part is true. But you don't know who all is a whale or not. Oh, Linda, I think they've got a sophisticated spreadsheet that's keeping track of all their crypto holdings. They got software that's doing that. Or if they're smart, they hired a firm that's doing that for them. According to the researchers, this indicates that trading whales were, in aggregate, buying on declines and then subsequently were a stabilizing rather than destabilizing factor in the market. Well, that sentence there just proves that what you're saying is false. They're not a stabilizer of the market. They cause the market volatility in the first place. It only stabilizes when they switch to go in the other direction. Who's the author of this? Andreas Vasquez. So this is another case in point that just because somebody writes an article doesn't mean that they're correct. This is why when I started doing my crypto education and I was going to YouTube and Google and looking stuff up and articles like this would pop up, I was getting misinformation or disinformation. You realize that millionaires and billionaires sometimes put information out there to purposely mislead everybody? Have you realized they did that yet? Yeah, they'll lie in a heartbeat because they know anything that comes out of their mouth is going to affect the market one way or another. Jamie Dimon. So whenever I see billionaires that's critical of crypto, the first question I ask is, what do they have to gain by even commenting on it? You don't like it? Sit down and shut up. I don't see Warren Buffett going out there dissing every Fortune 500 company he is not investing in, right? Because he doesn't. Berkshire Hathaway is very conservative and long on their investments. They don't have a massive portfolio. But is Warren Buffett going out there calling other Fortune 500 companies rat poison squared because he's not investing in it? No. But why is he saying it about Bitcoin? You know what that tells me? He's very interested in it. He's looking into it, and he probably has already invested in it. And he realizes that it's so early on, he needs to keep the rest of you guys out of it. Like Jamie Dimon, why you keep, he made a statement, and finally a reporter called him on it when he said, you know, I don't even care about Bitcoin. I mean, Bitcoin crypto market at that time was like $250 billion market. And Chase does, Chase Bank, JP Morgan does $6 trillion a day in transactions. That's not even on my radar screen. And then she said, finally, we had a reporter that said, if it's not even on your radar screen, why do you keep talking about it? And it caught him off guard. And then he's like, well, you know, my daughter called me up talking about she bought some Bitcoin and now she thinks she's the smartest woman in the world. That's how he played that off. Yeah. If it ain't bothering you, if it's a blip on your radar screen, you're doing $6 trillion a day and crypto's just 240 billion. Why got you stressed? Why does it have you sweating? Why are you talking about it? Just food for thought there. But let's go to the last article. And that's going to be about Harvard, Stanford, MIT, and other major universities have all invested in crypto funds. So let's take a look. Several members of the prestigious Ivy League have made investments into crypto, suggesting that institutional investors are finally starting to warm up to the nascent asset class. According to a report by The Information, the endowments of Harvard University, Stanford University, Dartmouth College, Massachusetts Institute of Technology, and the University of North Carolina have invested into at least one cryptocurrency fund. You guys are realizing that these Ivy League schools are preparing their privileged little princes and princesses that go to their school for the new century. They're getting prepared. An undisclosed source has also revealed the endowments of the respective universities have invested tens of millions of USD into the crypto funds. All of the aforementioned institutions placed in the top 25 of the wealthiest American colleges, with Harvard being a clear front runner with an endowment of $36 million, leading Yale by $36 billion, meaning leading Yale by almost $9 billion. Even though those tens of millions invested into crypto represent only a fraction of the overall endowment, it could be a sign that a number of high-profile investors are ready to enter the market. Endowments are essentially donations to the university, which are used to pay salaries, fund research, financial aid, etc. They are meant to provide additional income for future expenditures, and typically endowment funds stick to buying traditional stocks or government bonds to ensure stability. Rather than chase bigger profits, however, that has not always been the case, as Harvard and Yale endowments have suffered significant losses in the economic crisis of 2008 due to exposure on private equity and real estate. You guys want to know who the biggest crooks in America are besides the banks? It's the colleges and universities. Now, why would I say that? I have a college degree. One, because they charge an arm and a leg just to attend their school. And then they turn around and use that money and invest it to make themselves more money. And they hand you a degree in 4 years and student debt and tell you to go out into the real world. And you go out into the real world where there are no jobs that's going to be available to pay you a living wage. You end up working for a company where your boss has a GED or a less degree than you, and you're strapped in debt for the next 20 years. Was that paper worth it just to say I've got a degree? Let's not even talk about the NCAA sports, football and basketball, how they're pimping all of those players, raking in billions, knowing that only 1% to 2% will ever make it pro. They're pimping the 98%, making billions off of them. How you have a coach come in making $4 million a year and your kids are barely able to eat? They got to eat in the cafeteria 3 meals a day. That's all they can afford. One of the biggest scams. But my kids are still getting their degree, not because to use it in real life, but because in our household, you don't have that's not even an option. You will get that paper. Anyways, the information's John Victor claims that a move by endowments into funds that will directly bet on cryptocurrencies signals a major shift in investor sentiment toward the asset class, in the same way that institutions over the past decade became more willing to invest in private tech companies. Backing from such closely watched institutions could help validate cryptocurrencies, which are still considered too risky by many institutional investors. That's right, Stan. Earlier this month, Toshi Times reported that Yale invested a portion of their $27 billion endowment into 2 crypto funds, a $400 million Paradigm Fund headed by Coinbase co-founder Fred Ersam, and the $300 million fund Andreessen Horowitz, a 16-ounce fund. The institutional investor entrance into the digital market has been a long-awaited one, and hopefully the leading education institutions will open the gates to Wall Street giants who are still wary towards virtual currencies. Back in April, Ari Paul, a former portfolio manager at the Endowment of the University of Chicago, claimed that many institutions are interested. Wait, did I lose, guys? I'm supposed to beep on my phone. Okay, we're good. So Ari Paul, a former portfolio manager at the Endowment of the University of Chicago, claimed that many institutions are interested in crypto, but are waiting for the big names to invest, to have an excuse to follow suit. Those are the followers. Yeah, they want to wait till somebody else does it first. It doesn't get much bigger than Harvard or Yale in terms of education, and we can only hope more institutions will join the fray. Even though institutions are often considered more conservative than retail investors, a recent FundStrat survey has shown that they are actually more bullish on the short-term BTC prospects than the crypto community. So for those of you that are not looking to go to Harvard or Yale to get your crypto education on, that is why we have KGX. How you doing, Skrtala? See, KGX is here to bring crypto education to the masses. For those of you who dismiss this, who say it's not relevant to me because you don't understand it, you ignore it, you're doing so at your own peril. Adapt or die. If you want to not only thrive, but to survive the rest of this century, you have to know about crypto. Follow the freaking money. The most millionaires and billionaires right now, the fastest industry that's creating them is the crypto and blockchain industry. But you're going to go out there and keep selling coffee. Not knocking it. I'm just saying, where's the real money at? That's where you want to be. But before you can get there, you have to get educated. You must be educated in the space. I will not invest with, work with, or entertain my time with people who refuse to be educated. I don't care how much money you have. I know people in the crypto space that's made a lot of money, dropping $100,000, $200,000, and they think they're experts and they know absolutely nothing. The only thing they know is that Bitcoin keeps going up and they got lucky a couple of times. You are a liability to me. We want to bring crypto education to the masses. Teach you how to let your money work for you, not you work for money. Not a 9-to-5 job. Not how many people do I have on auto ship? That's my residual. How about how much money do you have invested somewhere that's making you money every single day? That's what we are all about. So with that, what day is today? Thursday. Oh, we got a presentation tonight. So it means I will be doing late night crypto talk at 8 p.m. Eastern tonight, and then follow that by our KGX presentation. So if you want to know how to get more education, you got to hop on tonight at 9 p.m. Eastern on www.kgxglobal.info and get yourself a green mining rig. Get yourself a green mining rig. That is going to change some people's lives. All right, everybody. I hope you learned something new. As always, that is the point. Have a great day. I'll see you all later. Bitcoin Brandon out. Bye-bye.